Imagine checking your investment account one morning and realizing your money earned more this year than you did from working every single day. Not because you won the lottery, not because you found the next apple, not because you got lucky. It happened because, at some point, your investments quietly stopped needing you. Most people never reach that moment. Not because they aren't smart, not because they don't earn enough. They quit only a few steps before everything begins to change. Tonight, I'm going to show you the invisible line almost nobody talks about. And once you understand it, you'll never look at investing the same way again. Meet Ethan. He's 27 years old. He works a regular office job in Dallas. Nothing glamorous. After taxes, rent, groceries, insurance, and gas, he usually has around $450 left each month. Instead of spending it, he decides to invest $350 every month into a simple low-cost index fund. No crypto, no meme stocks, no trading, just one boring investment, month after month, year after year. Now let's make one promise. Nothing changes, no promotion, no inheritance, no lottery ticket, no perfect timing, just one person making one decision every single month. Because when everything else stays constant, the math finally tells the truth. Chapter 2. The lie your brain tells you. Here's the problem. Your brain hates compound growth, not because it's complicated, because it's invisible. If someone gives you $350 today and another $350 next month, your brain expects progress to look like stairs. Every step the same height, every year predictable. That's how salaries work. That's how saving money works. That's how almost everything in life works. But investing doesn't. It behaves more like pushing a giant flywheel. The first push feels useless. The second push barely moves it. The 10th push still doesn't look impressive. From the outside, it almost feels broken. But something is happening. Momentum is quietly building. And once the wheel becomes heavy enough, it begins spinning almost by itself. That's exactly how wealth works. Chapter 3. The frustrating years. Let's fast forward. After the first year, Ethan has invested over $4,000. His investment gains? Maybe enough to buy dinner. That's it. 12 months of discipline for what feels like pocket change. Year 2 isn't much better. Year 3, he finally notices some growth. But it's still tiny compared to what he's putting in himself. Friends around him start making money chasing hot stocks. Some brag about doubling their money overnight. Others lose everything. Social media keeps showing Lamborghinis, day traders, and overnight millionaires. Meanwhile, Ethan keeps buying the same boring index fund every month, without excitement, without headlines, without anyone congratulating him. From the outside, it almost looks like he's losing. And that's exactly why most people stop. Not because investing failed, because it looks too slow to be working. Chapter 4. The hidden machine. Here's what almost nobody understands. Investments don't care how hard you worked. They don't care how badly you want financial freedom. They only care about one thing: how much money is already inside the machine. Think of compound interest like a tiny employee. When your account is small, that employee works part-time, barely noticeable. But every year, that employee hires another employee, then another, then another. Eventually, your money becomes an entire company, working while you're asleep. The crazy part? You never hired anyone. You simply refused to quit.